Hey Mom Nation, it's Katie Lambert. I am here with the fabulously fantastic
Ryan Gilliam. Sorry, I was waiting for you to say it.
Q. Where's your sign to Q?
Ryan
right?
Gilliam with Waterstone Mortgage. Hello, everybody. Good afternoon.
He is our finance ninja. That's
Yes.
what we call you. Hashtag finance ninja. And he is our go-to for all of our questions about mortgage and appraisals and credit and blah, 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 blah. Which is something that most of us need to do when we go to buy a house, right?
Yes.
Most of us.
Yes.
Some of us can pay cash. Not all of us can
Yeah.
pay cash. So credit is a big deal when getting prepared to buy a house, right?
It's a big piece of the puzzle. It is.
Very big piece of the
Yes.
puzzle. And it actually, I know there's a few different factors that go into, and we'll talk about this going
Yes.
further, that go into, calculating a credit score and all of that. But there's also a couple of different factors, and credit is included when coming up with an interest rate for a particular borrower.
That's
Is that
correct. It's a great question. Yes. When getting a mortgage, your actual credit score is really dependent upon your interest rate. So it's not just one rate for everybody. A lot of people think that, you go online and you ask, where interest rates at right now. What they typically show you online is people who have 800 scores, 25% down. But what they don't tell you is if your score is below a 700, for instance, or if you're putting less than 20% down, your rate goes a little bit up. So depending on where your current interest rate is at, that really depends on your credit score.
Right, and that can affect affordability. So
It can.
It's
Yes.
important to not go to Google and say, what are the current rates across the USA to basically base your math on when you're
That's correct.
when you're calculating.
Yeah, if you're using online payment calculators, for instance, you might want to be using one of those rates. But that might not be your interest rate. So that's why it's always good to talk to a loan officer like myself, and we could actually take your application, see where you're at, and I'll really shop your rate around with everybody that we work with, like Chase, Wells Fargo, US Bank, and give you the best rate that's available for your specific situation. So when you're actually pulling payments, it'll be more accurate. And you can always ask us for payments as well. We're always very available to do that. A lot of those online calculators also, they don't always factor in mortgage insurance, or they don't even factor in taxes sometimes. So sometimes it comes in a little bit lower than your actual payment will be.
Super important. All right, well, without further ado, let's move forward to, we got a couple of questions. I polled the group the other day just to
Yes.
see what are your burning questions. And I've got several of them here, so I'm just going to go ahead and
They're
rattle
great
them
questions,
off.
yeah.
Yeah, great. Thank you,
Yes,
guys.
everybody's right on point with the question.
Totally.
Yeah.
So I'm going to go ahead and rattle those off, and our expert here is going to answer. All right, question number 1. What is the best thing to attack to bring up a score? Student loans, medical bills, collection accounts, credit cards, etc.
That's a great question, like to start everything off. Number one, the best thing to tackle is when you have revolving credit card debt, is paying down those balances. A lot of what your credit is determined by is how much you have available, but you're not using. So for instance, they really look at what your high credit limit is and what your actual balance is compared to your high credit limit. So let's just say, for example, you have a credit card at $1,000 high limit and you have $500 or more, that you're using half or more of what you have available, and that's going to actually negatively affect your score. So one of the best and easiest ways to get a score increase is to actually pay down your credit card balance to less than half of what your high limit is, or ideally 10%. If it's 10% or less, you have a lot of credit available that you're not using, and that's going to really help your score. So I'd say number one, that's pretty much the easiest way to get a good jump in your score. Another way would be is if there's any late payments. Of course, a random late payment here or there is going to negatively affect your score. It could easily drop it anywhere between maybe 20 to 60 points, depending on how recent it was. But if you normally have pretty good credit, this is kind of a good tip for you. A lot of people don't know it's available, but you could actually get a goodwill exception by your creditor to actually have a late payment removed. I do that with a lot of our clients. So if you're
Good to know. Ding, ding, ding.
Yeah. So again, it's called a goodwill removal. So if you've paid your credit card on time most of the time, you've had it open for a few years, you can always call and be like, hey, we've been a great client. We just made one mistake. We were on vacation and we forgot. It happens to everybody. Could you please remove it? A lot of the times they will. So that's one thing to look at as well. Outside of that, between late payments and paying down credit cards, of course, the other big thing is collections and charge-offs. So if you have any of those medical collections, credit card, anything like that, that's going to ding your credit more than anything else. And what's interesting about it is even if you have like a $50 charge off or collection, it's going to hurt you almost the same as like having a $5,000 one. Because really the credit bureaus, they just see collection and it hurts you. They don't really take a look at the balance as much when really factoring how that's affecting your score. So when it comes to collections, the best way to actually, help your score and get it increased is to pay them off, of course. But before you do that, this is an important tip. You're going to want to call the collection company and say, I'm willing to pay this, but only if you get me a deletion letter. So because you don't want to just show that it's actually paid on your credit, because you'll still show collection on your credit.
And that'll re-engage it, actually.
It'll re-engage it. It'll re-report, and sometimes it'll actually drop your score instead of helping it. So what you're going to want to do is say, hey, collection company, you might have to speak to a manager and just say, I'm willing to pay this, but I need a deletion letter. Because if you do get one, we could do what's called a rapid rescore. We could send it into the bureaus and get it removed. And that's going to be like the collection never even happened. And that's going to increase your score a lot more than just paying it off.
That's awesome news. We've done that for a couple of our moms in the group already.
We have, absolutely, and it really huge impact.
Yeah, and that'll save you money because if you have a higher credit score, you can get probably
better interest rate. Absolutely, more loan options as well. There's a lot of grant programs out there, but they need a little bit of higher credit scores, like a 660 to get the most of the grant. So we have some people who could qualify, but not for the grant, and we work on their credit, like we just said, paying down balances, removing collections, and getting you there.
So if somebody just had some questions and they were not really ready to purchase a house right now, but they wanted to prepare and get their ducks in a row, and just maybe they're a year out, maybe they're 2 years out, would that be somebody that you would be willing to speak to? Just take a look at their credit, see what could be removed, see what that little, that thing that you just had mentioned about the one late, getting that removed, that kind of thing.
Oh, absolutely. So it's important to kind of know where you stand. And we do free consultations, and we make it really easy. You don't even have to come in the office. I know a lot of people are busy, they're working. We work with a lot of people just on their lunch breaks. They call us and we take an application. It takes about 10 minutes. And it's really important to kind of know where you stand and where your credit is. And even if you're a little ways out, we'll put a plan together to help you increase your score so you have more options when you're ready.
Perfect. Awesome. Ready for the next one?
Yes.
Okay, I hear all the time that people are wanting to know how you can be strategic about repairing your credit. Is there anything that you can do to make the process faster?
Yes, the best way, the quickest way, another trick that I have here, like I was saying before, one of the biggest factors for getting qualified and getting a good credit score is how much credit you have available and how much you're actually using. And really, again, the length of credit that you have. The longer you have credit cards open, the better score you're going to have. Newer credit, sometimes it could actually negatively affect your score. So one trick that we actually have, that I'll tell you a little story, my wife and I had done it, but is getting added on to a family member's credit, an authorized user or a joint credit card.
So like an old account?
Yes, absolutely. So you're going to want to make sure before you do that, it typically has to be a family member. And before you get added on, there's a few things you'll want to check, of course. You want to make sure that they've had the credit open for a while and that they've actually paid it on time. That's going to be important. And that they have a pretty low balance. If so, if you get added on as an authorized user or a joint credit holder, you'll actually have that reporting on your credit in 30 days. So before doing that, though, you're going to want to actually speak to the creditor that could add you on and make sure that they do report to the credit bureaus. Because sometimes if you get added as an authorized user, they'll just give you a card, but they don't report to your credit bureaus. But most of them do, but you always want to double check that.
And just make
so
sure.
That's a great way. My wife, like I was telling you the story, after we got married, she didn't really have much credit established. So I had a credit card since I was 17 and always just charged gas on it and paid it off. My mom taught me very well, and I had great credit because of that. Yeah, so she didn't have any credit, so I added her onto my card as an authorized user, and 30 days later she had an 820 credit score just because she had one perfect credit card. So that's a great way, a quick trick to get your score increased pretty fast.
Awesome, good to know.
Yeah.
Okay, next question from the group. I'm also curious about the home buying process, and aside from credit, what it takes to be prepared or ready to take the first steps. Once you get your credit to the proper score, what else do you need to consider to get ready?
Perfect. So yeah, like we was kind of saying at the start, credit, it's a big piece of the puzzle, of course. Having the right credit score is one part, but there's two other parts as well. There's income and assets as well. So what we do is like I was just explaining before, taking an application and just doing it over the phone. We do collect all your information, do a credit check, but I'll also ask you about your employment, about your income, about your assets, if you have retirement accounts, what you have in checking and savings, and really like all three pieces of the puzzle we put together to determine how much we could approve you for. So the great way to get started is just to take that application so we know where you stand, know what you would qualify for based off of your income and your credit. And even if your assets are a little bit low, like we did a video a couple months ago talking about the grant programs, we do have options with those as well. So that would be the first step, is just taking that application and just making sure all pieces are coming together and what we could approve you for.
Awesome. So here's my question. This is not a question from the group. So over the last 11 years or so, I've sold a couple of houses.
A few
One thing that keeps coming up, especially with first-time home buyers, is there is a fear of talking to Ryan, getting their credit checked. And the fear seems to be surrounded around, well, it's going to drop my score if I'm not ready yet, and I talked to Ryan. Can you please explain?
Yes, that's always a fear, is that your credit score will drop if you check what they call a hard pull, of course. And it would be considered a hard pull because we are checking your credit and not just your score, but every single trade line that you have. When you do that, it's called a hard credit pull. But the thing is, actually, if you just pull your credit once every couple of weeks, it does not affect your score. The only time it really does is if you pull it multiple times in a very short period, like a day or two. So that's the only time that it's really going to affect your score. So the only time that it actually does, for instance, if you're shopping for a car, a lot of the times the dealerships will maybe send your application out to a bunch, 5 or 6 banks and try to find you the best deal. We do see that when that happens, it will drop your score. But 1 or 2 every month or so, it's not going to hurt you.
So calling Ryan and getting the whole, lowdown on your situation is not going to drop your credit. In fact, it's going to more than likely increase your credit because you are going to have specific advice.
Absolutely, specific advice. Yeah.
Okay, guys, it's not scary. He's not, look at him. It's not scary. Okay, next question from the group. The confusing thing to me is one credit company has me at a certain number and then another one has me a little higher.
Yes.
How does this make sense?
Yes, we get this a lot now, especially with the popularity of Credit Karma, freecreditreport.com. Is when I'm talking with a client and we're pulling credit, is they would usually tell me like, oh, based off of Credit Karma, this is where I'm at. So really what we have to say is that there's 2 things that go into place here. Of course, there's 3 credit bureaus. There's Equifax, Experian, and TransUnion. And we pull all 3 of those and we use the middle of those scores. So what those credit bureaus do is they all have the data from your history. They have your credit cards, they have your car payments, they have any late payments you could have had, collections, things like that. And so those bureaus all have different information. Sometimes one has a collection reporting, but the other one doesn't. And sometimes one has a credit card that's reporting, but the other one's not showing it. Right. So that's why there's 3 credit bureaus, because each one of them have different reporting methods. So that's one piece, is that there's those 3 bureaus and they have different information. But the other piece is whoever is pulling the credit from these bureaus, they interpret the information differently. So it gets kind of confusing, but what happens is depending on who pulls it, there's different algorithms that are used, and they determine your score differently depending on which algorithms used, or which software they're using. So they'll look at each credit bureau and they'll come up with a number. So Credit Karma, for instance, they use a system that focuses a little bit more on how long you've had credit open and your pay history. But banks such as myself or Bank of America or Chase, we have to look more at derogatory credit. So our equations look a little bit more about your past derogatories. So sometimes our score might be lower than Credit Karma because of a past derogatory, and Credit Karma doesn't put as much weight on that as banks do. So it gets confusing, but really the bottom line is, each person pulling your report uses different equations to come up with a score and focuses on something a little bit different.
So it's like getting a second and third opinion from a doctor, basically.
Exactly. That's a good analogy.
We're getting a second and third opinion.
Yes.
All right. Next question from the group. Repairing credit stuff for sure. Like I've heard you can ask to have a collection account removed completely when settling a debt. Is that true? Asking for it to show paid in full, does that really make a difference?
Yeah, and I know we pretty much addressed that.
Touched that, yeah.
So yeah, if you pay it, it reports to your credit again. I know you mentioned that. So sometimes if you just pay it and it's still showing on your credit, it will actually lower your score. Briefly though, usually only for a month or two, and then you'll start seeing a little bit of an increase. But if you're looking to buy a home in the next few months, that could be very detrimental to your qualifying. So what you'll want to do again is before you pay it off, you need to have a discussion with the creditor who actually has a collection and say, I'm going to pay this off, but I need a deletion letter. And 80% of the time they do. We very rarely see creditors not willing to do it. Their goal, these collection companies, is to get paid.
Right.
And they're going to do whatever they can to do that. If they have to give a deletion letter to get it paid, they'll be fine doing it. So I don't see very many people have issues with that.
And you don't mind coaching our moms through that if they
Not
need
at
a
all.
little bit of help?
Yeah,
like,
I'm even
who do I
happy to do a
call?
three-way call. I do that a lot of the times to kind of speak with the creditors and explain what we need.
You don't sleep, do you?
No.
Ryan doesn't sleep.
3 hours is normal, right?
Yeah, I mean, You're talking to moms. It's normal
Yes,
for us.
Exactly.
Hi, Ashley. Hi, Sherry. Good to see you, girls.
Hey, Sherry. Sherry's here. What's up?
She's here. All right, next question. Do I have to pay off everything to boost my score?
You do not. In terms of collection accounts, like I was mentioning before, a lot of the times if they're 2 or 3 years old, they're really not taking into consideration as much as if they're more recent. So sometimes if they're older, we don't even really look at them anymore, and I don't recommend those being paid. But in reference to that question, I know that they're more so asking, whoever was asking, it's a great question, was about the credit that's available, like with installment credit or with credit cards. And no, we would never really recommend that you pay off credit cards completely, because when you do that, it stops showing as active on your credit. And a lot of the times it won't take that the credit available into place, and your score may drop a little bit. So ideally, what you're going to want to do is always have a little bit of a balance on your credit cards, but pay it off each month so you don't have to incur the interest charge, of course. So a lot of people, what I'd recommend, especially if you're just new and starting off getting credit, is 2 credit cards are really ideal, and sometimes just charge gas on one, groceries on the other, and pay them off each month. And that's going to be a low enough balance. It's going to keep your credit active and give you the best scores.
And it's still ideal to have 3 open and active trade lines, right?
Yes, that was one of the questions as well, is what's ideal, is there a minimum? And to be honest with you, there's not a minimum. Sometimes you could actually have an 800 score with just 1 credit card if it's open for more than 12 months. So 12 months is ideal. You want to see at least a year worth of credit history, but we've seen as low as 6 months, and someone has 3 scores reporting, and we've gotten them a home. So really there's no minimum time in terms of getting a mortgage that you have to have credit available. It's just a matter of getting a score reporting, and most of the time 12 months is kind of the rule of thumb.
And is there any, I know way back when, there used to be the use of alternative credit, so like cell phone bills and things like that. Is that still in play?
Yes, that kind of went away. That was back in when guidelines were a little easier, when there was more, stated loans, weird, different things like that. So a lot of the times, if you had light credit, you could add on cell phone bills, your rent. You could still do that, but it's not going to impact your score. So if we're light on credit and we need to kind of prove to underwriters that you do have a positive history, sometimes we'll add your rent history onto your credit, but it's not going to actually impact your score, unfortunately.
Okay.
Yes.
But it could help with the processing.
It could, yes, absolutely. So it's always good to see that you've had positive pay history on other accounts.
Perfect. So don't go late on those either. What's the minimum credit score required to obtain traditional financing, such as conventional, FHA?
Great question. VA? Yes. A lot of people will actually say 580 is the minimum, but even though they report that, it's still very difficult to get anybody qualified for 580, because usually they say you need to have clean credit in the past 3 years and you would qualify. But most of the time if you have a 580, there are some derogatories. So the rule of thumb really is what we use is 600 is the key to the government programs like an FHA loan or a VA loan. As long as you have a 600, you can typically qualify. Conventional is a little bit different. If you have a large down payment, we've seen as low as a 620. But if you have a lower down payment, like 5 to even 3%, which is available, typically about a 660 or a 680 is needed. So, but if it's a lower, it's 600 is kind of the rule of thumb of where you want to be.
Perfect. And that's part of all your coaching when people call in.
Oh yeah, absolutely.
And they say, please look at my credit, make it better so that I can get an awesome loan when I'm ready to go.
Yes.
And it'll be very affordable.
Yes.
You coach through all of that.
Absolutely. It really depends on the time frame. If it's a short time frame and we need to get things done quickly, we're going to try to get you to a 600 if it's below that. But if you have more time, if you're a year out, you just signed a new lease, we're going to want to get you over a 700 so you have more options. And I'm always here to coach you through that. Yeah.
Awesome. Next question. We may have touched on this, but we'll see what else you have to say. Does it hurt your score to voluntarily close a credit card or multiple credit cards?
It does, yes. That's not something you're going to want to do. You're always going to want to keep your accounts open and active. Like I was mentioning at the start, is really one big key component to having a good score is how much credit you have available, but how much you're using. So if you have a $5,000 high limit and you close that card, the available credit you have shrinks quite a bit.
Right.
So the percentages are shifted and your score will drop. So we don't recommend closing accounts. Definitely keep them open, keep them active, and that's what's going to get you the best scores.
Awesome. And this last one, I think we did touch on, but again, we'll see what else you have to say. How many lines of credit do lenders look for when shopping for a mortgage, and how old do the accounts have to be?
Yes, I know we kind of touched on that. 12 months is ideal, but really in terms of how many you have, I mean, credit or banks, they like to see at least 2. 3 is ideal, and the balance of credit is important as well. Not just credit cards, which are called revolving credit. They like to see installments as well, so maybe one installment. And what an installment loan is a car loan, a student loan, something that you eventually pay off, not like a credit card where you're charging, paying off. So it's good to have one installment loan and then 2 credit cards. That's going to give you the best credit score available.
And a mortgage, too, is pretty darn good.
A mortgage is
isn't it?
pretty darn good, yes. Yeah.
All right, well, that is it.
That was all the questions.
That was all the questions. That was really
I know we have a
quick.
lot of questions afterwards, so you could always get that to me and we'll post on the website. Or you could contact me directly anytime. My availability, I'm always around. My cell phone number, 602-614-0740. So call me directly if you have any specific questions. If you want to chat about your specific scenario, I'm always here to help out.
Ryan is awesome. You can text him, email him, call him, almost any time. I haven't tried it at 2 a.m. yet. I just won't do that to your wife.
I probably would ask, yeah.
You probably would. You'd probably be like, what's up? I'm just hanging. Cool. Well, again, like what Ryan said, I'm sure this conversation has sparked a lot more questions for you guys. Comment below, and I'm going to follow. This is going to obviously be, throughout the day is going to be running in the group. So whenever you have a question, comment below in this particular post, and I will get you the answers.
Awesome.
All right.
Perfect. Thanks, everybody.
Bye, Mom Nation.